And joining me to discuss the equity scene at midday is Cremen from Adviceworx. Caroline, thanks so much for your time this afternoon.
Okay.
So, as I mentioned, Trump back at it, this time around threatening to slap the EU with tariffs worth 25%. How concerned are you about this, considering that, that economy really recording downbeat growth? And I guess these tariffs are going to make matters worse.
Well, the thing is, we don't know because, there was really no detail. What are the tariffs going to be on? What are the exceptions going to be? It was just, the market was just waiting for NVIDIA results, worried that the NVIDIA results would tank the market, and they were good. And then suddenly Trump started talking, of course, you have the tariffs coming in. So there's absolutely no clarity. But what you always note is that, when there's uncertainty, markets don't like it. So there's been no detail. It's next week. And until you see some detail on this, unfortunately, this is going to be the effect on the markets.
And you mentioned NVIDIA's results there. They're also forecasting even stronger demand moving forward. What have you made of those numbers?
Well, they were amazing. And the revenue was 40 billion. But I think the figure that really impressed me is that they beat expectations by $1.7 billion in revenue. That's absolutely mind-boggling, the size and the growth of this company. So, it's very clear that AI remains strong. You can have competition from other areas, and you might need cheaper chips, but you're still going to need the top-rated chips and all of NVIDIA's other items that they have. The momentum might not be quite what it was in the last 2 or 3 years, but this is a very, very strong growing company. And despite the naysayers, I think it really surprised a lot of people.
Do you think
we'd be up today
if it wasn't for Donald Trump, right? Do you think that investors and markets have kind of dialed back when it comes to expectations for NVIDIA? Because usually they do record really upbeat numbers, but they're never market-beating numbers.
They beat on revenue this time. So I think that was a good thing, because in this type of market, you've seen other reporting results come out. They're really good, but they beat expectations, which are really lofty, and the share prices fell 10%, in excess of 10% in some cases. So they didn't do that to us. Thank you very much. But I think the market is just seeing that it's still a growth stock, but it's maturing. So, I think last year they did, just tens, percentage points up, but you're not going to get that massive growth year after year after year. But I still think the market anticipates that there's going to be strong growth from this company, because we're still really at the infancy of AI applications, and NVIDIA is right there in the center of it.
So from an industry that's really growing to one that's struggling, the mining sector, and lower PGM prices weighing on Implats, the group has warned of further restructuring if current conditions remain the same. The PGM players really being hit hard over the past few years. Caroline, where's your head at in terms of, the bottoming out in prices on that front?
So I don't even think we've reached a bottom, maybe. Impala's also talked about production cuts. Obviously, those types of things do help with the prices. But I think the theory of the market always is this is a cyclical market, and the market will turn up again. And I think we really do need to maybe explore the fact that maybe this market, with that kind of increased use of EVs, is maybe not going to turn up like we expected it to do, and this is probably going to be a depressed market for a while. And that's certainly my feeling, and I would actually just stay away from the sector entirely.
Let's move over to MTN. Currency woes in Nigeria and an impairment in Sudan weighing on earnings. The group flagging a decline in HIPS of up to 79%. What have you made of that update? Expected, right?
Yeah. It's horrific reading. It is expected, but it's still horrific reading when you read it. And it's not really MTN's fault.
Yeah.
And people need to remember that MTN operates in very difficult environments of the world. I mean, you cannot get a more difficult environment in the world right now, Sudan, and that's where they are. And, every few years you have a Naira, devaluation, which goes right to the bottom line of MTN, or they're withholding payments from Nigeria or something. So, yes, that's the type of environment. MTN, maybe not the stock you want to be in if you don't want to have a heart attack every 2 years.
let's move over to Motors. They managed to eke out some growth as the health of the local consumer somewhat improves on the back of, lower interest rates, lower inflation, and of course those two-part withdrawals also coming into play. With that being said, and looking at some of the new vehicle numbers from December and January also improving, do you expect Motors to pick up moving forward?
I don't know. And I think that the results were probably a lot weaker than I expected, considering the two-part system. It was really minor growth, considering all the money that actually went into the economy from that once off, almost a once off.
Yeah.
So I would have expected it to be a little bit better. So I do worry. I'd love to see what this next quarter or this next half is going to do, because obviously you're not going to get the tailwinds from the two-part system. And those figures weren't strong enough to actually fill me with a great sense of anticipation. And we're not going to get that many interest rate decreases, or certainly not enough to stimulate the economy that much. So I think a little bit worrying, all in all.
Yeah, and you and the markets don't seem to be pleased with those numbers, because that share price is down 11% at the moment. Caroline, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
After market close, it's very important, because it's going to define the trend on the Magnificent Seven and all those AI stocks that have been under quite a lot of pressure and are coming down to very attractive levels. Even NVIDIA itself is, I think, below 30. It's a multiple, which for a company that's grown the size they have, this is attractive. What the results are going to be, you can bet that there are going to be many analysts who see the glass half full, others that see it half empty. It's that kind of stock. But we've got to get over this noise. It's still a very important business, and at these kind of levels, and I've no doubt the results will be outstanding, even though they might underwhelm some. That whole area of the market is beginning to look very attractive again. Yeah. So I'm going to just use it as a proxy for the Mag 7. With my Mag 7, I ignore Tesla.
I'm not going with the traditional Russell 2000 ETF. I'm actually going with the iShares US Small Cap Factor Equity Factor ETF. So the ticker is SMLF. And all it does is the Russell 2000, essentially 2,000 companies, and it's kind of the small mid-cap sector in the US. And I think there's a lot of concern, and certainly we're hearing it a lot from clients around just the concentration that you're finding in something like the S&P 500. The Magnificent Seven has just done so well, and it's become such a large part of that index. But with, I suppose, the deregulation that we're seeing in the US at the moment, you do expect the US economy to do really well. The problem is that maybe some of the pricing of these Magnificent Seven will turn them into I think the guy who actually coined it, I can't remember which bank he's from, is now calling them the Lagnificent Seven, saying that the next 10 years they're not going to actually deliver the same kinds of results. So if you want to capture kind of the broader US economy, looking at something like the Russell 2000 is your option. But if you look at the small cap multi-factor ETF, it's kind of top ranked, and it generally outperforms, because what it does is essentially just looks at a couple of general factor rankings to try and discount the real garbage that sits in those 2,000 stocks. So you come out with about 800-900 stocks inside this ETF, and over the last 7 years, it does kind of it's done 9.6% annually, versus the Russell 2000 that's done about 6.8%. This is in US dollar terms. So a significant outperformance of that. Then if you look at its volatility as well, also a lot lower. So if you look at kind of the efficient frontier, it gives you a higher performance, historically speaking, at a lower risk, at a lower standard deviation. So for me, if you're looking to broaden out of the S&P 500, this is something to look at.
So both Gary and David sort of backing the US economy here, with NVIDIA representing the large cap stocks and also as, a stock that's the bellwether for the markets. Gary, on the other hand, backing small cap stocks with the Russell 2000. So we spoke about NVIDIA, just your views around the Russell 2000.
Yeah, I agree to a point. And certainly, small caps, it might very well be their day. This is a very small cap friendly president, a very business minded president. But for one factor, that Russell 2000, it's like you said, it is more diverse, but it is a lot of industrials, a lot of healthcare, a lot of smaller financials, and a lot of the smaller tech companies. Now, it's going to be okay unless inflation gets sticky and it doesn't come down, and interest rates don't come down, because these are companies that can't necessarily borrow at, more preferential rate. They also find it more difficult to transfer the impact of a higher inflation rate to their customers. So that could just be the thing that maybe makes us not such a great investment. If you're going to make an investment here, just bear that in mind.
And we did see, the Russell 2000 tick up last year when those rates started falling and inflation started falling. So that is something to take in mind. Caroline, what's your stock pick?
Well, it is Salesforce. It also came out with results. It beat earnings expectation, but it missed revenue by 50 million rand. And just to bear in mind, its revenue was $15 million. But its revenue was $10 billion. So, I'll take that. But this is customer relationship software primarily. This is a segment of the tech sector. A lot of us are not really going to see the impact of AI immediately, but certainly this customer relationship is where we're first going to start to encounter and already encountering AI applications, especially in the use of AI agents or data mining. So I think this company is really at the forefront of what we're going to first start to experience AI. And it has got a very healthy cash flow, growing cash flow, nice annuity revenue, and an alternate to the tech companies, the Magnificent Seven, to get into there. I don't think it's as expensive as the rest of them right now.
Caroline, thanks so much for taking us through the day's markets activity at midday. That was Caroline Cremen from Adviceworx.